Hey traders, Nick Shaheen here looking at Ford and GM. So let's start with Tesla. Today is 523 and market's having a little tizzy. And guess what stock is green? Tesla. Anyway, it had some news, I shouldn't say news, leaked email or whatever. Back to GM and Ford. Tesla is part of the story but not integral. So which is better, GM or Ford? On a bad day, they're down another chunk after being down a chunk before that. So this is Ford. Let me zoom out to a daily, maybe it'll be less noisy. Okay, here's a daily chart. Every candle is 1 day, and you can see that it almost covered this gap right here, which was earnings gap. Luckily, we were long that. Made some money on it, but here is back. So is it time to panic out of it for those who bought it? So if I'm long Ford and I haven't sold yet, I'd wait it out, because this is a level of contention, a neckline of sorts. So I'm speaking technicals right now, first of all, and then we'll tackle the fundamentals. So this cluster right here, all by itself is not that powerful, but this is a point of interest for a long time because of this action right here. So it was alleged that they tried to hold. They fell through it through the Christmas debacle, but all stocks did. So this, I disregard this. So this is a neckline for this action right here versus that action right here. So somewhere in the middle lies the truth, as they say, which means that it should be support as it approaches this area. It's not a hard line in the sand, but if I wanted to pick a hard line, I'll put 9.5. 9.6 will probably be okay for me, but that was the low of the candle today probably. It is a good company from the standpoint of value. There is, other than this stuff, there's value in the stock itself. I believe the PE is somewhere around 14, which is high if you compare it to GM. GM is like almost 1/3 of that. So if I were to pick two from the standpoint of value, GM is probably the better one because it has that mathematical value below it. And technically it's not as perched. It's closer to the lows in my opinion, visually at least, and it looks like better support below. Even though it's been falling pretty fast as well, and it's past its pivot zone that we just lost. However, it's a different set of circumstances. So from the value perspective, this one's better. They're both cheap, let's put it that way. They sell at like 0.3-ish times sales. Compare that to Apple, I think sells 3 times sales, and Tesla probably 2 times sales. So from that perspective, they're cheap. From the PE perspective, GM is cheap. Ford, so there is value below. So pick your favorite and buy the dips is my opinion. And if I'm long GM, I'm not panicking out of it because I know there's value below it. Of course, anything can change in the market. The earnings can change dramatically, but which is the second point why I like GM. The management team, I feel like they're ahead of the game a little bit more. They're not afraid to face the White House, for example, on several times. They make decisions that benefit their business regardless of the consequences. And they're not late. I've heard so many times from the experts, oh my gosh, Ford is waiting so long before it does this or that, switch to SUVs from cars, whatever, or close this. Feels like GM, since Mary Barra took it over, is doing all the right stuff. So if I had to pick, it'll be GM. But Ford, it's a cheaper ticket price, the stock price, $9 to $10 versus $35. So some people might think it's cheaper that way, but the value is in the other stock. You can see this is the low that we saw in December, and right now it's 31% above it. So, where is he? Oh, interesting. So GM did not put its low, only 11%. In December, so it held up better than the whole market. So if you're not a technicals matter. If you're not a technical analyst, they still matter. So some people draw trend lines like this. Okay, so as long as the trend line is intact, then that's fine. Otherwise, this might be the downside of it. I also draw, it's not a line, but a zone somewhere on here. So I guess I'll use my chalkboard to mark it up, since we did that for Ford. We're looking back at GM. Again, a daily chart. This zone right here, this was hard fought. ignore the highs and lows, extremes. Somewhere in the middle lies the truth. So it's in a zone that should be supportive. If you're looking for a hard bounce line, you know, it's probably somewhere in that cluster down here. But first, there's, oh, what's this one? Maybe that candle right there is almost matching. So people who like that specific. But for me, I like to do a brush, a thesis that I can ride for a few days or weeks or months, rather than try to trade the day. So this is a 5-year chart of GM, and you can see, okay, I'm going to switch to a monthly chart. All right, so now we're looking at over a decade. Not over a decade, a lot more than 5 years, probably since the resurgence of General, not government motors. Okay, I'm going to extend this because now we have more data, and it's a, so that zone I just marked up by hand, apparently it's been pivotal for since the resurgence of GM altogether. So it's likely to be support. Let me see if I can see the same for Ford. So on the other hand, Ford is got the other story. So it tried to break out from a neckline and it failed. So let me go back. GM, it broke out and it's trying to hold support on its way down, which is a bullish stock that's trying to find footing. Okay, bullish stock trying to find footing. Same time frame. If I go to Ford, it's a bearish stock that's trying to break out. So pick your favorite. If I were to put a trigger to buy, it'll be somewhere 10.5. Or if you want to use a breakout of a trend line, you can draw a nice neat line here wherever you want, either on the top of the candles, the highs and closes versus the thistles, whatever you call those tails. You know, this, once they break out of descending lower high. The good thing is they have higher lows, lower highs coming to a point, so something is going to happen inside this big box. Keep in mind this is monthly chart, monthly, so every candle is 1 month, and the close is what counts, so this is not going to happen like in a day or two. So these are my thoughts on GM and Ford. They're both good, they're both cheap, they could get cheaper, but if my thesis is that the stock market is fine once we get through these tizzies. We have like 1,000 cuts today. And once we get through them, if you look at the P&Ls, we should meander higher, and these two will rally. So which one would you buy? I think it's a matter of preference. I just told you one is a bearish long-term trend that's trying to break out. That's Ford. The other one is a bullish stock that's trying to find footing so it can continue its bullishness. So if I were a buyer, I'd be into GM. So how can I do it? I can actually sell puts at $30 way out in time and collect over $1, maybe $1.30. Maybe go lower if I want to collect $1, and that means I'm committed to buy it at 30. So I'm saying, give me some money now, and if it falls through 30, I'll pick up your stock at 30, even if it falls to 28. So my break even would be like 28.50 or something like that. I'm just, you know, these are ideas. That selling puts is dangerous, but if I know what I'm doing and I'm okay buying the stock, I'm able and wanting to buy the stock, then I can sell it, collect money. And if it doesn't fall to it, that money is mine. I don't own the stock, but I made some money without even owning it, just from selling somebody an insurance company a contract, basically. If somebody's holding the shares from wherever, $10, and they want to be out at 30, they say, hey, is there anybody out there that wants to buy my shares if it falls through 30? Somebody will do their homework like we're doing right here and say, you know what, at 30, that'll be an insane deal given the circumstances that we have now in the macroeconomy. Then, yeah, I'm here for you. Give me your $30 stock if it falls below it. If it goes to 29.99, I'll buy them off your hands. But for that, here's your insurance policy. Give me some money now, and it's like $1.30 for that through the end of the year. So that is the theory of selling puts. It is dangerous, but if you do your homework and you're willing to buy the shares, hey, it still gives you an 11% buffer from today's low. Just eyeball. All right, Nick signing out. For Ford, it's hard to do that because the premiums are a lot lower for some reason.